let's make a start. And if what I'd like to do really is ask our two panelists first and foremost just to introduce themselves, just tell us a bit more about your background in finance and also, of course, your interests in AI. So if I may, let's start with Maury. Thank you.
Thanks, Alistair. I'm Maury Shank. I do a number of things related to AI. I'll mention two quickly. I'm founder and CEO of an AI-enabled edtech company called LearnerShape. And I'm also on the AI team at a global law firm called Steptoe, where I used to be a managing partner. I'm an advisor there. In financial services, I speak regularly about implications of AI for financial services. This is one of them. It's one of various AI sectors that I look at.
Okay, thank you, Maury. And over to you, Peter.
Hi, I'm Peter Leahy. I'm a financial consultant. I specialize in fixed income and derivatives markets, touching on equity in some respects as well. My background is in dealer firms as a trader and salesperson. I've been a consultant for some 10 or 15 years now. And in recent times, because of my focus particularly on market analytics, I have found myself looking more and more at artificial intelligence and machine learning, because that is coming to the fore. It's an exciting development that holds out, well, as we will discuss today, it holds out possibilities which are highly exciting and potentially profitable, such as better analytics and analysis of markets. It also, we must also always, of course, be mindful of risks and the potential for malfeasance, and that's part of the discussion as well. Thank you, Alice.
Thank you. Yes, indeed. Thank you for those introductions. So if I may, let's get started with the questions themselves. And, the news, I think, AI is very prominent in the news today. Both, in a positive sense, as we're hearing about, the latest releases on GPT-4 and Google Gemini. So it's a fast moving area, but also we're hearing, there is negative news stories and lots of concern surrounding AI, how, ultimately it's going to take over the world with deep fakes and fraudulent activities. Is this true, or how realistic a kind of vision is this? So if I may, Maury, what's your kind of view on this?
Well, I think AI has much more potential for benefit than it does for risk. However, that doesn't mean we shouldn't be concerned. Excuse me, a bit of a frog in my throat. Airplanes have great benefits, but we still regulate them, and things still happen, as we've seen with Boeing. AI is the same thing. It will have great benefits. And there are some serious risks. Misinformation, as you mentioned, its effects on elections, potential destabilizing effect in international conflict from autonomous weapons. But financial services, what we're here to talk about today, there are some big risks. Market manipulation through misinformation, instability of markets. So we're adding new technology that could lead to things like the flash crash that we had a few years ago if we don't properly govern it. And then cybersecurity, which is very important for financial services. That's a broader risk in other sectors, but I think is a significant one.
Okay, no, thank you for that. And Peter, just from your perspective, as someone that's obviously worked in, the front office in financial markets for many years, what's your kind of view, if I may, to start with, just looking at it from a perspective of risk?
I think it's important to recognize risks. There are important risks out there, and Maury just touched on what, to my mind, is certainly from my background as a markets person, the potential for market moving and manipulative misinformation is something we must all recognize, and it's important that we seek out ways to guard against that. Some of the ways are as yet not obvious. We have seen in recent times, I can think of, there was an example recently, there was an attack, a terrorist attack in one country who were anxious to accuse, I'll leave names out of this, another country. And we quite quickly had the defense minister of the second country kind of owning up to it, until later it turned out that wasn't a genuine news piece at all. We have no idea who was behind it, but it just shows you that there are avenues that we need to be careful we don't go down or fall into those kind of traps. A lot of what I'm, I guess, here to talk about today is in the field of machine learning and how that can be an adjunct and means to, if you will, leverage human skills in market analytics. I think there are fewer ethical concerns there than perhaps there are in the field of kind of impersonation and creating fake news and so forth, which is Maury's just already touched on.
Okay, no, great. And actually that leads nicely into our, if I may, our next question, which is really, as ever, because this is a whole new world for all of us, really. So we're having to come to terms, a bit like finance in a sense, new terms, new expressions, and it's quite easy. And there's plenty of scope for confusion across, people using terms when they don't actually strictly apply. So if I may, it would be great if you could, Maury, perhaps help us here to explain the difference between, ChatGPT, generative AI, and machine learning. And also, why is it so important that we understand the difference, particularly, say, if you're a regulator or a financier? Thank you.
So I may leave some of the details of machine learning to Peter. He's been looking a lot at that, but just a historical perspective. The term AI was invented in 1956, and people at that time thought within a few years that we would have a solution to having computers act like humans. That obviously didn't happen. And AI went through a period of, we called them AI winters, where people thought AI didn't have promise. And for many years, decades, literally, AI was something else. It was what we called expert systems or good old-fashioned AI, where we tried to write down the rules that how a computer should behave to be artificially intelligent. That didn't work very well. And when AI finally started to work was around 2012, when we started to use machine learning, where the program would learn from the data rather than being given explicit instructions, with deep learning, large neural networks, to first recognize images, do automated translation, automated fault detection, things like that. That has had a huge impact in industry. And I call that predictive AI. It's predicting whether two words are the same in two different languages, predicting whether an image is a cat or a dog or a building. And then later in the 2010s, we started to come up with generative AI. So the ability to use AI to generate new content. And that's what ChatGPT and these LLMs are. Generative AI has been making an impact for 4 or 5 years, but only in the last year and a half, with the release of ChatGPT, has it come to everybody's attention. So those are the two big categories I think people need to understand. Predictive AI, which is still the most important in financial markets for sure. And then generative AI, chatbots, ChatGPT, et cetera.
Fantastic. And so if I may, over to you, Peter, just to maybe build on that and in particular, obviously say a bit more about machine learning and where its role and where it fits in alongside AI.
Yeah, machine learning, I'll start with, has potentially enormous roles to play in the analysis of markets. I'll just start by perhaps a couple of sort of broad categories of AI. If you ask for a categorization of it, you'll hear terms like supervised learning, unsupervised learning, reinforcement learning, and so forth. We're not here today to worry too much about those, but certainly learning from data and from market activity is one thing, because that allows you to do do two things, really. One is to seek to understand, okay, if these things happen, and a lot of these are, if you will, real life in markets and human experience is never quite as linear or, if you will, single factor. A lot of our models, for example, option pricing using the Black-Scholes model, we're talking about factors moving in a linear way and only really looking at one changing factor at a time. What we can potentially do or get from machine learning is to try to understand, go back over data that's from the past and try to understand what factors appear to have been influential or important. Secondly, what weightings to apply to those factors. And we can begin then to seek to, if you will, model and to understand how the dynamics of a market are actually operating. A second, if you will, branch of machine learning would be reinforcement learning, where actually, rather than trying to define the dynamic of how this data impacts this market price, for example, what we might do with machine learning is we run through a decision tree, if you will, a series of, think of one of those decision trees we all see, you know, if you want to do this, yes or no, and then you move on to the next box. Not dissimilar to that, a decision tree here that says, okay, we want to, for example, maximize wealth by buying or selling this small set of things. And we can iteratively try out decision makings to see how that impacts the total value of our trading book or portfolio. And of course, from that then, rather than seeking to understand a formula or a model, we're trying to learn behaviors which appear to be successful given an objective such as I said, the value of a trading book or portfolio. So in short, what we're trying to do, particularly with machine learning, is to find powerful ways to leverage the kind of things that human beings, the logic and the motives and the methods even that human beings have been applying, but far slower, to markets and for a long time.
Thank you. So if I may, because opportunities is such an important area, we want to kind of just broaden that a little bit further. So far we've looked at kind of some examples from the front office. I guess I'm interested to find out a little bit more about what's possible now to improve the way that banks, investment firms are operating in from maybe the middle and the back office, maybe looking at the risk, operations, compliance areas of the business, which obviously are also so important. I don't know who would like to respond on that one.
Well, I'm happy to respond. I mean, I think the predictive tools that I mentioned, so that have been around for quite a while, are useful in compliance. So for anti-money laundering compliance, for recognizing anomalies, for cybersecurity, for a lot of those things, being able to do human tasks where a human recognizes something, but do it more efficiently with the tool is a very powerful application. And there's a lot of RegTech companies that have been around for quite a while that are using some traditional data science methods as well as AI to do those things. I also think that generative AI is quite risky at the moment, particularly for regulated sectors like financial services, because it hallucinates and it says things that are wrong. And there are plenty of stories out there about people tricking chatbots into selling them a cheap airplane ticket or something like that. That's a pretty big risk in financial services, but we will get better at that. So I think at least in low risk applications, there is a lot of opportunities to use chatbots for a variety of purposes, although that is not as much back office. But to go beyond that, what people are excited about in the last couple of months is what they call agent workflows, where a LLM, a generative AI agent that can respond to commands, goes off and does things for you. And we expect there to be lots of these around. And these things can use existing tools out there. That is a huge area for expansion. And I think there's a great deal of unknown where that will lead us. But I think people are going to figure out how to use these generative tools to go out and act as independent agents and use a whole host of tools, back office and front office.
Yeah. Right. So, and if I may, just at this point, I just wanted to remind everybody, because we've got a good number of people on the call today. If you have listening to the conversation here, if you have any questions, you're still not clear about something, please just post a question and we'll happily ask that to the panel as well. So just building on what you're saying there, Maury, around future opportunities, do you feel how if you imagine, I don't know, 3 or 5 years time, how much of our kind of working day in financial services will be spent working in collaboration with the AI tools? Do you see it as becoming like a, if you like, at the moment, obviously there are all sorts of systems and tools that, bankers and investment firms use. How much will it kind of, do you think it will start to, overtake or become the dominant way that we're doing business? Or do you think that's perhaps exaggerating its importance?
Well, 3 to 5 years is an interesting time frame. I think it was Bill Gates who said we overestimate change within a year to 2 years and underestimate change in over a 10-year time frame. But over the 5 to 10-year time frame, I think we're going to see huge impact of AI. AI is one of those rare general purpose technologies like fire or steam power or electricity or digital computing that operates across sectors, and people are just figuring out how to use it. And so the short answer is, in 10 years, I think we will see lots of impact, and I don't know where it's going to be. It's kind of fun to live in these times and watch that.
Okay, no, that sounds good. I guess, perhaps we should, what's the word, address. I'm not sure we can give a guarantee or a response on this. The elephant in the room, if you like, is obviously people are saying, yes, but hold on a minute. What does this mean about jobs? So is this going to be such that it becomes so efficient and dominant that we don't really need to kind of all the roles that we've created in, or many of the roles, I should say, in the front, middle, and back office, will they become, redundant? Or what's your kind of view of how this tool will change the way financial services firms are structured?
Well, there's been predictions for the past 10 or 15 years that AI is going to take all of our jobs. Evidence from previous technological revolutions is that they create a net increase in employment. And so far, there is significant evidence that that is what AI will do as well. There certainly hasn't been wholesale job loss, but there's also huge disruption. And so a lot of jobs will change. Jobs will be eliminated and new jobs will be created. And I think financial services is one sector where people are going to be doing different things and they're going to have to be retrained to do those different things. There's a knock-on effect, which is social inequality. The Industrial Revolution was a time of great growth in jobs, but it was a horrible time for social equality because these new technologies tend to reward capitalists. And that's something we have to figure out a way to deal with as a society. Indeed.
And Peter, do you want to maybe comment, because obviously this is such an important area, to comment on this as well?
Just following on from what Maury was just saying, I have read somewhere in the last few days that there are fantastic salaries being offered for people who are able to write code and so forth at the sharper end of AI and machine learning. So what Maury was saying about equality and so forth is germane to that discussion. Just on the other point that was being made there, sure. The way I see it is that certainly in, as I said, I've got a lot of interest in market analysis. And my view is I don't see AI making people redundant. I see AI and machine learning, which is my particular area of interest in that, is I see it as making people better at their jobs. It leverages skills. It makes their skills, gets their skills more powerfully applied. One little area which we could talk about, we'll talk about equities in a moment, but there's a fantastic number of people, particularly in US markets, concerned with trying to predict mortgage prepayments. And that is a field that's absolutely cut out for AI and particularly for machine learning, because you're talking about stuff which has got financial logic to it, but also trying to interpret the vagaries and complexities of human behavior. you set a machine to go and learn not just the financial stuff, but some of the human behavioral dynamics, and you get something which is highly valuable. But I still don't see how that makes a machine replace a human analyst. It just makes the human analyst better equipped.
Got you. Fantastic. So it's good to see some questions coming in, and we will, as I say, very shortly be coming to those as well. Here's an interesting question, which I'm sure I know both of you gents have quite firm views on. But anyway, if everyone applies AI using the same tools, will we end up in the same place in terms of stock picking, investment decisions, etc.? So I can see you smiling there, Peter. So over to you. Yeah.
Well, I don't believe that for a moment. I think that is just scare stories from, I want to say from some financial journalists, but I'm well aware that some of that has been put down as quotes from the chair of the Securities and Exchange Commission in the States. But he is somebody whose job is to make us aware of risks and problems. However, we're talking here about tools. Tools get used by human beings, and whether, as Maury was saying, it's an aeroplane. I use a similar idea. It's a motorcycle, which is really useful and beautiful thing, but they can be lethal. Same idea. Now, the way I see it, AI is going to be is already being used by different analysts in slightly different ways and with different specifications, which means that we don't all expect that we'll reach the same conclusions about, for example, I know that Chairman Gensler used the idea of stock selection and stock screening. We don't all end up with the same short list of stocks because we specify what the computer needs to be doing in slightly different ways. And even if we did end up with the same short list of stocks, bear in mind that an equilibrium market price is where the power of sellers has found a force equal to the power of buyers. And that will always be the case. And some will believe and have more confidence in the AI advice or results than others.
Great. Okay. No, that's fantastic. No, thank you, Peter. And absolutely right. The wisdom of crowds, or the wisdom of how that guides decisions, will not everybody's clearly going to follow that same pathway. As I say, it's good to see some questions coming in, and actually these kind of link to our next question as well, which is obviously around knowledge and skills. So what are the key skills that people working in financial services need to develop in this whole area? So Maury first, if I may. Yeah.
Well, I think that there are three areas. One is to have a general understanding of the kinds of AI and what they can do. So you get an intuition about whether using AI in a particular circumstance makes sense. And obviously the level of depth of that understanding will depend upon the role you have. The second is understanding the risks. So we started off, AI has bigger opportunities than risks, but we need to look out for the risks, know what to do, know what not to do. And then third, depending upon your role, again, have some basic practical understanding of how to use these tools well. So a lot of companies are making ChatGPT, often an internal version of ChatGPT or some similar tool available to their employees. Understand how to use these tools well. There are some techniques of prompt engineering where you can get better answers if you know them well. So I would say those three areas.
Okay, no, that's really helpful. Thanks, Maury. And Peter, I know you've been busy preparing some learning materials in this area, so good to get your view on this as well.
Yeah, I'm going to say that I'm now answering, if I may suggest, a slightly different question to the one that Maury just gave an eloquent and very interesting answer to, which was more about how should professionals be informed about the entire area. My focus has been on how to apply some of the subsets of AI, particularly machine learning, in markets. And I guess a small plug here for Intuition's know-how product. I have been commissioned to write, well, for the time being, three things. One on the application of machine learning in equity screening, so stock picking, if you will. A second one on the application of machine learning in fixed income. So within that, talking about identifying yield curve shifts that are less or more likely, filtering out anomaly trades for those that have a realistic profit potential. And as I've already referred to, analysis of mortgage-backed securities and prepayments. There's a lot to be said about those three areas. The third topic that I've written about in the know-how catalog is on the use of machine learning, particularly reinforcement learning, so-called, in the context of trading and hedging derivatives, and within that, most especially options. That's again a fascinating field, because we all know that some of the models we use, most notably perhaps Black-Scholes, have significant shortcomings. They focus, as I've mentioned already, too heavily on simple movements, and often rather wedded to normal distribution, and for a limited, or even in some cases single, dynamic factor. And by applying machine learning to derivatives, we're able to actually move that whole area of analysis a whole few steps forward, which is exciting.
No, that's great. No, thank you, Peter. And I think one thing we can predict is that this is an area where, you know, there are, by the nature of it, because we're all kind of relatively new in terms of experience. So there are going to continue to be, new learning programs from organizations like Intuition, and keep an eye on our, as Peter was saying there, with our know-how tutorials and future updates on that. Just obviously mindful we're relatively short time now, but we're just changing topic a little bit around risk and governance. So here's a question that's come in. Will the risk elements linked to using AI for financial services be mitigated with the open source models which can be adopted? And what would be the governance around them? So if I may, Maury, what's your view on this kind of whole area of risk and governance? I think you're on mute, unfortunately, Maury. Sorry, I just spotted that. Sorry. Ooh.
Yep.
No problem.
The question was about open source models. And I don't think that open source models have a huge effect on risk management. I think they're a useful additional tool. People are worried that open source models are going to spread the capabilities of AI to people who shouldn't have it. But in financial services, where you're making a deliberate decision to use a model or not, I think you've got to put similar governance structures around open source and closed source models, decide what data you put into them, what governance structures you have. There are slight differences, but I don't see open source as hugely linked to the risk problem.
Okay, and we are. I think we'll have to make this one our final question. But will it not be more difficult to gauge if AI models? Just give me 1 second. If AI models are biased as compared to other models, I don't know, Peter. What's your view around being able to identify the bias? To what extent they're more susceptible?
Well, I think with what I was talking about in terms of the markets I mentioned, I think we need always, and in machine learning, from everything I've understood about it, people are mindful of periods of time, and we all know that in one period of time, moment in history, if you will, the dynamics or the influences on markets are another set of things from what they will be at another moment. Right now, for example, in a lot of markets, we're pretty obsessed by inflation numbers. That isn't going to always be the case. So I think that a lot about, for example, the use of machine learning is about recognizing biases and actually exploiting them. I don't think a correct application of any of these techniques should leave the analyst wide open to being if you will, hoodwinked.
Great, thank you. Well, sadly, we had all too short a time, but I'm confident this is a topic that we will come back to again, possibly both through this kind of format, but also through other learning sources that we provide for our clients as well. So I want to extend a big thank you to both Maury and Peter for all your insights. And again, just to remind everybody that we will be sending around a recording of today's session for you to view and share with colleagues. So thank you very much.
Thank you, Alistair.
Okay, bye-bye for now.
Thank you. Bye-bye.